Hello, and welcome to new trade recap from the Markets Middleman. Today, same as I've done in April, I'm sharing all the trades that I've taken during May, which was a great month, not in terms of P&L only, but also in terms of personal development, key shifting moments, and a lot of lessons that me and the team and I actually learned together. So, with that being said, let's kick off with this interesting recap. So, this is the whole month on May. Just a quick note, if you haven't watched the April breakdown, please go ahead and watch it before you continue this video because this one is built upon May in April, sorry. And April was a great month. It has a lot of examples, a lot of setups. So I want you to take an idea about that one first and then get back into this one. So let's zoom in into the first week of May. And first day of May was on Friday, and Thursday, Friday, I just stopped trading for the month. I wanted to take a break, and I started from Monday. So what Monday told me about price is the following. Price swept, okay, the previous weekly high on Friday and already created an internal break of structure or change of character. But this wasn't enough. It haven't closed below the sell side. So what I've done on Monday is the following. I waited for a full break of structure on the 1 hour time frame. So this is the weekly open. Price created a low and then created a high and then fully closed below this sell side over here, not reaching this sell side which comes from Thursday. Okay, so at this point over here, I have the full picture. I have buy side taken, I have a clear BOS below the previous sell side, and I have a fair value gap with the 1 hour order blocks. Now, as a quick reminder, I like to use the order blocks when they are the only order block up closing candle within the downside. So if you take this wave from here to here, you see that this is the only order block visible on the hourly time frame. So what I've done is the following. I entered short around the mid-range of the fair value gap. I protected my stop loss within this candle's high, and I wanted to target the previous weekly low. Okay, so this was the weekly high, this was the previous weekly low that I was targeting, and I thought that yes, we could potentially be continuing the overall bearish trend, negating the fact or not taking into consideration this change of character simply because it was followed by a bearish break of structure. So this is why I wanted to target the weekly low. Now, this trade had obviously didn't reach the target, and I trailed break even the second day. So this was Monday. Monday closed, Tuesday opened, price went higher and took my break even. So this was the first trade I executed. So my feedback for this trade was the following. First, the level that should be protected is this small pivot point over here, which is around the high of the order block. So I protected my stop loss a little bit more than it should. Of course, usually it's better to give price some room because usually, or not usually, sometimes price could manipulate higher and the whole idea would still be valid. But you must have invalidation, a definite invalidation level for this trade. And since I can potentially target the weekly low, I had some extra room to protect it with this candle's high. But if I can take my stop loss above this high over here, then I could target, instead of the weekly low, I could target this sell side over here. And instead of waiting for the full potential, I could have closed it on 2.6 hour right at this sell side liquidity. So this should have been my potential trade instead of this one over here, which was obviously break even. And second day on Tuesday, I was not available yet. Sorry, this was my stop loss. So the max potential for the trade reached 2.14 hours, but my stop loss at this time was still open. The second day after I saw price took this high, then I trailed my stop loss to break even. So this was the first break even trade for the month. Now moving forward, you see there was a potential reversal by Tuesday sweeping Monday's low, but it lacked the close above this internal buy side for an early change of character. So if this 1 hour closed like this, I could be potentially going long from this point over here. But since I was already in a short position and since the price couldn't close above this high, I just set my stop loss to break even and that was it. Now by the end of New York session on Tuesday, price clearly closed above this internal buy side, marking a change of character. So you can see this as a reversal pattern. retraced back into a 3 hour breaker, or it can also be seen on the 1 hour time frame. This was the very first hour of Wednesday, and market ripped higher. Now, I woke up the second day on London session. You see a clear market structure shift, okay, followed by a break of structure. At this time, the bias is definitely bullish, at least till the weekly open. So I'm no longer interested to see price going lower, especially after this break of structure over here. Price was powerful enough not to retrace back into this breaker or fair value gap, and it created another break of structure. So at this level over here, there was a 30 minutes fair value gap. Why I chose the 30 minutes? Because the 1 hour was a little bit wide range. So within this 1 hour, the lower mid range of this fair value gap was the 30 minutes. So what I've done is the following. I just set a buy limit order at the 30 minutes fair value gap. I targeted the weekly open, and I protected my stop loss with the candle that created the fair value gap. That was a significant trade. It was done quickly within, I think, less than 2 hours. Less than 2 hours, price delivered to the point. I know that price went aggressively higher, and this 2.4 trade could easily be flipped into 5R and so, but I like to be consistent with the measurements of my trade. I know that consistently I can make 2.5, 3R within a trade, but I cannot consistently make 5 and 6R within a trade. You can either trail your stop loss on the 5 minutes candle, and each new 5 minute low you can trail your stop loss. This is also a way for you to manage your or to hold your winners more, but it depends on the time, whether you're free to do so, or certainly like your rules, etc., for the money management. So this was a significant trade, executed, taken, etc., and we moved on to the next one. Now, on May 6th, Wednesday, during before New York session in 1 hour, price swept the last week's high. Okay, so we've taken this week's low. Okay, last week of April, before the last week of April, we took the low by this sell side over here on Thursday, and then ripped the high. So the objective was kind of done. So I stayed on the sideways for some time just to understand what the market could potentially do. At this point, I have no bias. Like up until this moment, I have no bias because price can continue lower or can rotate higher and take this buy side again as a inducement or another sweep and then fall down. But after those 2 hours over here, I saw the potential that, okay, we retraced back into a previous breaker, we filled out all of this imbalance, and price created an internal break of structure, and the target was at this high, leaving a 1 hour fair value gap aligning with this breaker. So again, I shifted into a bullish bias after I saw this displacement to the upside. So what I've done is that I placed a buy limit order at this level. I protected my stop loss around 54. I'll make sure of it a little bit later, and I targeted this buy side over here. And this trade ended up in also break even, and I will show you why break even. Because price took my entry and tried to take this high, failed to take this high one more time. At this time, my stop loss was still at this level. Now, I left a note that if price tries to break the high one more time and it fails to do so, and this was last couple of hours from New York session, I just trained my stop loss to break even because there's no time left after New York session and there's no reason for price not to push higher. So instead of a down closing candle, I wanted to see an up closing candle and perhaps take my target. So this was a break even trade. I trailed break even right after this high was taken, and within the same hour price took the break even and just continued lower. So at this point I've had break even, take profit, and break even. So what happened the second day was the following. Price made a change of character to the downside, closed below this low over here with those breakers, left a 1 hour order block aligning with those breakers over here right at around the 50% of this displacement to the downside. But here's the thing, I haven't entered short over here, and if you did, that was a good trade, honestly. That was a good trade. But the only reason I didn't do so is because of the way that price went to the upside. So how price was approaching the area of interest coming after an 8 hour fair value gap, I wanted to see at least a 1 hour confirmation that price is rotating lower simply because of the momentum that was going up with correlation to the DXY and stuff like that. So Systematically, this trade was very nice because you've seen the sweep already, you've seen the change of character already, and you've seen a interesting level to enter short from. So if you took a loss here, it's justified because that's really a nice setup. And overall, at least price would take the sell side and then continue higher. But for some other factors like the structure and some correlation with the DXY and the GU, I just avoided taking a trade over here. So that was on Friday. The week closed. The second week here, I made an update on YouTube, saying or actually showcasing the potential for a continuation to the upside. So how I saw this is the following: price closed above this buy side, changing the character to the upside, and also leaving the possibility to sweep this high one more time. So I said very clearly that I want a full close above this buy side or another BOS in order for me to enter long and target the high of the previous week. So this is why I haven't entered long from here, because price lacked the close above the SPY side. And the closing basis on the 1 hour is significant. It's really important. So you see over here, we have a close well below the buy side, the sell side. Here I have a close well above the buy side. Here as well, I have a well-defined close above the buy side. So I never enter a trade before the full 1 hour close, except when I'm front running a certain move based on the lower time frames, which I'm not sharing right now. I'll keep that for later. But anyway, when did I get the full close above this buy side? Is at the last hour of New York session. So what I've done is the following: I placed a buy limit order at the 1 hour fair value gap, protected my stop loss within this low, and targeted this high over here. I think my stop loss was at the body close and not the candle wick. I'll make sure of it because my target for this trade was 2 hour. So I think yes, it was at 17.7. I'm gonna show you my notion and how I journal my trades at the end of this video. So um, what is my feedback for this trade? My feedback for this trade is that this is the only B setup. So all of those are A plus setup because they have the clear bias, clear draw on, clear point of interest. Even this one, even though it failed, gave me a room to go out break even. But there was a huge chance for price to manipulate, or sorry, sweep the buy side and then go lower. But with this trade, first, my entry is not at the 50% level of this wave. So even though you have a fair value gap, you need to be buying at 50% and below. So instead of placing my trade over here, I could have placed my entry over the 50% FIBO level. I get better risk to reward and I get at a discount. And the second thing is the time. So I entered at the last hour of New York, and usually after New York session, price goes sideways until second day or PM session, plays out a little bit, but then Asia and London, and it's just outside of my time window. So the time and price wasn't on my side. Plus, on other brokers, I just saw this later on after I executed. At other brokers, price already swept those two relative highs. So it's like I'm kind of buying a little bit high at this level, even though there's still a potential to raid the highs and then continue lower. But still, structurally, I'm buying a little bit high according to this displacement over here. So I could have went out at break even after price swept the high. So this was Tuesday, Asia session, sweeping the high of Monday. So if I'm at the charts and I'm watching what happened, I could trail break even. Why? Because this hour should have displaced higher above this buy side. But instead it just swept and aggressively went down. So I could have got my losses at break even. But this was during Asia session, and Asia session is outside of the time window that I trade. So I'll be sleeping basically. So I woke up, find out that I've taken the loss accepted. I just set out those points that I'm sharing right now, and that was it. We move on into the next trade. Now, during this week, I've taken this loss on Tuesday and I waited price until Wednesday. And on Wednesday, I'll tell you exactly what happened. So on Thursday, May 14, the structure was great. Like what we've had so far is a clear major external change of character closing below this low over here, and then price created, sorry, this is the full change of character, then price created this 1 hour bearish fair value gap, which was the area of interest that I'm waiting for me to place my shorts. But instead, let me zoom in a little bit and show you by just maybe 1 or 1.5 pips, price couldn't reach this level over here, and unfortunately I missed this move to the downside. Now when I studied the price action, I saw that this was also a fair value gap. And in this case, price is heavily bearish. Sometimes you don't get this balance because price created a internal buy side, swept it during London session, and on the 15 minutes time frame, there was a very clear break of structure with 15 minutes order block. If you are really taking notes and observing every one by one, go on the 15 minutes time frame. I'll leave this as a homework for you and observe what happened over here and the potential for you to join this sell-off. So there was a crazy sell-off on price. And yeah, it's not a good feeling to be prepared and ready to execute, but just price by a few points doesn't give you the entry. And yes, you can enter in a different form, and it depends on the rules that you have and on the system that you follow. But it doesn't mean that if this happens, then you go ahead and chase price lower and start selling at a low point. Because at this time, yes, price ripped down, but in most of the cases, you wouldn't have this extreme move, and price would sweep the sell side and then reverse against you. So if you entered short just because of FOMO or fear of missing out the move, this time you could have been lucky and catch the move, but other times it would sweep and then reverse against you if you're shorting anywhere here. So yeah, this was the only trade I've taken all of this week, and then this week started. I also posted an update, and while I was posting the update, I shared this trade over here. And this trade came with a very simple form that Monday swept Friday's low, okay, and then made an immediate displacement above this internal high over here. So you can perceive this as a market structure shift. Price created a bullish fair value gap, retraced in it for the first time, then made an inducement right at the inverse fair value gap over here that is aligning with the breakers well at the 50% mid-range of this displacement. So I've placed a buy limit order. There was a 2-hour fair value gap as well. Let me see, I targeted this high and this trade was around 2.4 hours. So yeah, that was the trade on Monday. Pretty quick trade within less than 2 hours. The target was met because I wasn't surprised because I've done everything that should be done. I've seen everything I need to see, the sweep, the change of character, the area of interest, that's it. So I kept it simple, and that was the trade for this week, for this day, sorry. So market took a 4-hour fair value gap, made a market structure shift on the 30 minutes outside of my trade window, then created a bearish change of character, opened up the target for the sell side and the daily fair value gap. So at this point over here, okay, I've set this breaker or this 1-hour order block, sorry, by also notice that this is the only up closing candle within the sequence to the downside. So price did not reach the full sell side yet, made a clear change of character. So I was very ready and prepared to short price from this level over here, targeting the sell side. So my order could have been taken like this. If we enter right at the order block range, this is the full invalidation, but this is still safe because price shouldn't reach that level. Entry at around this the area of the order block wick. I like to use the body, but in this case, since it's already at an optimal according to this wave, then entering at the wick is fine for me. So the objective for this trade was to R. Yes, there was no entry, so I just simply removed my trade, my order, and then waited for price. Now, here's what happened. Second day, Tuesday, on Wednesday, swept Tuesday low and made a clear change of character, closing above all of those buy side liquidities and not reaching this full buy side yet. So what I've done is that on Wednesday I placed my buy limit order and I kept it till Tuesday London session. So this was my order. I protected my stop loss over here and targeted the buy side. This was a 3-hour trade, and yes, this was one of the fastest stop losses I've taken because price manipulated more than it should. So why I protected my stop loss within this level over here and not lower. First, because if price is really bullish, it just needs to tap into the imbalance maximum to the breaker level and then just go up, okay? Because I need to see some smart money getting in. But the fact that price displaced a little bit lower, that gave me the signal that either ways it's just gonna go and continue lower. And this is exactly what happened. Price manipulated higher, failed to take this high, and then continued lower to take the sell side one more time. So that was a justified loss. Why? Because I've seen the sweep, the double sweep. I've seen Tuesday low taken right at a daily fair value gap. This is a daily fair value gap that I mentioned in the outlook. Then I've seen a clear break of structure to the upside. Notice that it closed well above this previous buy side, and I've seen this huge 1 hour fair value gap. So this loss was justified. If I do this consistently, if I see the same key factors consistently, I'll end up being profitable over the long run. So we're trading the probability here. We're not trading this specific setup. So at this week, I've really done nothing after that because as you can see, price just went sideways, sweeping the low, just failed to close above the high, and that was it for this week. Now, here's the last week of this beautiful month. And the trade that I've taken on the last week wasn't on EU, it was on GU, which I will show you in a while. But first, I will tell you why I haven't taken any trade on the euro, and simply because market opened with a gap higher. Okay, this is Monday, created the buy side in Asia session, then came New York session, swept the buy side. I was waiting for a displacement or a continuation to the upside. The displacement that tell me that okay, we swept the buy side, we created the market structure shift, then I can target the gap open. But this didn't happen, and price just went in sideways up until Wednesday. Wednesday, price swept the high of Tuesday and Monday and made a clear displacement to the downside. Now I will just jump into the 4 hour time frame a little bit just to show you a clear market structure shift, displacement, leaving behind a beautiful breaker on the 4 hour, and this was supposed to send price lower. But what happened is the following. What happened is that DXY took the buy side, raided all of the buy side, the weekly highs, and then displaced lower, but EU couldn't take the sell side. And since those two pairs, or this pair and the dollar index, is highly inversely correlated together, so they go exactly, almost exactly opposite to each other, then EU showed strength and couldn't take the sell side. I was still open-minded. That's why, because of the SMT, I thought, okay, maybe price could test this level and then sweep the full sell side again, negating the idea of the SMT. And by this time, the XY would take the buy side just one more time and then do whatever it wants. So within this level over here, the 4 hour breaker, price traded much higher than this level. So I lost interest in the EU. But for this sake, I went into GU and I saw the potential for the trade, which I will show you right now. So on GU, I have taken no trade all of the month except last trade of May. I took it on GU, and this was the structure. So we've seen that price reached an 8 hour order block on the higher time frame, created first change of character followed by a BOS, also closing below this low over here, another BOS, another external BOS, just prices creating lower lows and lower highs over the time. And within the last push to the downside, I've seen the 2 hour order block, the only up closing candle within all of this sequence. And it's just coming at an optimal level, right at the 50% or above a little bit than this displacement. So my idea was a retracement back into the order block and then continue to take this sell side over here. So also because of the SMT on EU and because of the DXY taking the buy side, I haven't placed a sell limit order, and I've just took a small reaction on the 5 minutes time frame, and I've taken the trade, protecting my stop loss above the 2 hour order block high and targeted this sell side. This was a 2.9 hour trade. Unfortunately, price went a little bit in my favor and then ripped higher. And yeah, loss is accepted as long as I have taken everything. Like, even though if you take the sell side, you see that price closed aggressively below it. So it wasn't just a sweep. So I've seen the break of structure already. I've seen the change of character, break of structure. I've seen the area of interest, and I also took small confirmation on the 5 minutes time frame. So that's why I justify this setup, and I still call it an A plus. And if I continue doing this consistently, I'll always maintain profitability in my approach. So that was the last trade taken on GU. So as a full recap, this was the first trade. This was a break-even trade, or let's just put 0 here. This was a 2.4 hour trade. This was a 0 trade. This was -1 trade. This was plus 2.2 trade. This was -1, and that was it. And I have a -1 on GU. So if you calculate all of this, I have two winning trades, I have two break even, and I have three losses, which all combined is 1.6 R trades. So it's not as good as April or the previous month, but what is more important than the results is the feedback, is the process, is you sticking to your rules. With small adjustment within this trade, I could have booked an extra win. That's extra 2.5 R. So at any time, avoiding this loss, for example, could have also given me one extra point. Apart from that, like I have really zero miss out. If I was a little bit open-minded and executed this on the lower time frame, also this is additional winning trade in my favor. So you see what I mean? The result reflects the action, yes. But when you sit down, you reflect, you take some notes, then you really understand how you can potentially increase your profitability, reduce the errors, wait for full confirmation. If you realize I haven't changed the time frame except just one time on the 4 hour, I showed you once the setup, but my strategy can be executed on the 1 hour time frame. You don't even need to scale up or down. Of course, when you scale up is to just find the weekly profile, the daily profile, etc. But if you just look into the 1 hour time frame, it's the sweet spot of time frames. It's slow enough for you to take a decision and confirmation and invalidation, and it's fast enough to deliver trades in your favor, such as 2-3 hours, or maximum it would take 12 hours to trade based on this measurement, and you'll be done. So yeah, you eliminate a lot of noise on the minute time frame, especially if you don't know what you're doing. So yeah, if you really take this into consideration and work on your approach month by month, week by week, day by day, there's no way but to see some good progress. So with that being said, I promised in the beginning of the video that I will show you a little bit of my journals, and it's just to give you a certain idea about how I take notes, how I take screenshots before, after, and everything in between. So first, this is the table that I use. I set the pair, the date, direction, higher time frame in the area of interest, the entry if it was manual or by limit order, the trade type, if it was an A plus setup, B setup. Of course, when you enter a trade, you always think it's A plus setup. But once it's done, maybe there was something that you haven't seen, such as the trade on May 11 that I showed you. I entered a little bit high, so that was a B trade. Um, uh, and the return for the trade as the result. So this is in terms of like the Excel for the trades. So as for my trade execution, this is what I do. So I have a section in Notion that's called trade execution. So here's the first trade, the notes that I've taken, first trade shared, break even, also second trade, the before, the after, the result, the note, what I could have done, etc. This trade as well, what happened, the notes I've taken, trade 4. Also, this is the one I entered a little bit high. Then on May 18, this was the trade. Again, the sixth trade on EU, that was the fastest stop loss, and then the last trade on GU. So in addition to those notes, of course, I have lower section, which is personal for me. I share some notes, trade recaps, some trades that happened without me taking them, some internal reflections on my psychology and my mindset and all of that. So you can open a new page on Notion if you haven't done so, and put every note, every trade you take, because it's really important. I'll make a video totally about journaling and the importance of it and how it changed the game for me forever. So with that being said, I'm overall grateful for this month. With all of the things that happened, all of the trade setups, experiences, I had some personal stuff going on, which is great, upgrading, leveling up me and the team. The team and I, this is the second time I make the same mistake. So yeah, that was really great month. As you can see, it's not that profitable, but I'm fully aligned with my edge, and I know that if I continue doing the same exact thing, this is why I wanted you to watch April's recap, because you will see that I'm just doing the same exact thing. Yes, I wait a little bit longer. Yes, I don't have this excitement or adrenaline to have like 2, 3 trades in a day. No, less is more. When I trade less, I preserve my mental capacity, I preserve my capital, and I preserve my energy too. Once I have a valid entry, I'm fully ready emotionally, psychologically, mindset, capital wise. I'm fully ready to execute on the trade. And at some point, yes, you will have a busy week. You'll have maybe 3 or 4 trades in the same week, maybe a couple of trades in the same day. But as long as you're just following your rules, yes, the market is generous and it will provide you such lucrative and profitable days, and they will always show up. But you just cannot abuse this and hope that it's going to happen every single time. So, in terms of where the market is going next, I'll wait until the week to open. I'll wait until Monday. Just when I understand a little bit more for the context that I already have, I'll just share another update. So I really hope you enjoyed this trade recap. It really means a lot to me to see some of you guys had gained something from it, learned something from it. This is the purpose why I'm doing this from the very beginning, and it's a form of me to express what I've done during the month openly, publicly, here on YouTube with full transparency and progress. So yeah, I really hope you enjoyed it. I really wish I was watching something like this when I was just learning. So yeah, I really hope you take the best out of it. Leave your opinion down in the comments. Let me know if you like something, if you dislike something. I'm all open for all opinions, of course. So enjoy your weekend. Blessings, blessings, blessings. Get ready for June, which is going to be your best month in your life. Peace.